So hello everyone. Today we are having a very special guest with us, Miss Kirti Dalvi. She is from Mahindra Manulife Mutual Fund, and she is managing Mahindra Manulife Mid Cap Fund and other funds as well across categories and market caps. She is a very senior fund manager having experience of more than 2 decades. So welcome, ma'am.
Thank you very much.
So we would like to ask you a couple of questions. Firstly, markets have seen sharp swings recently. So from a fund manager's lens, where do you see the biggest opportunity today, fear or optimism?
The biggest opportunity today doesn't lie, it neither lies in the fear nor in blind optimism. It lies with you should have the quotient of valuation aware optimism with bullishness, because the way the markets are today, we do believe that Indian markets looks attractive today from the investment point of view. Given the price and time correction, what we have seen, we started the year in 2025 with a lot of expectations. I guess those expectations have not panned out. It has not shown I would say bit of consolidation was required at that point in time. We have seen a lot of outflows on the FII front. Having said that, the domestic investors were buying in the markets and have supported despite that kind of inflow. Nifty has given you 10.5% kind of return in 2025. There is an market is always driven by the buyers and sellers, right? Promoters who were seeking capital for growth, as well as the domestic and the global promoters who have monetized the assets were the suppliers, and the buyers were obviously domestic retail investors, the DIIs, who have supported the market. Having said this, it is just the shift of hands which has happened. The domestic asset pool to grow or overall market cap to grow, you require the third element, the third key participant, which is the FPIs or the foreign institutional investors. I think we do believe that global capital, which tracks and trades in the market on a relative basis, will probably find India relatively better, given the correction in those markets, especially in the emerging markets, like say China, South Korea, Taiwan, and that allocation can probably help they moving their flows to India, and India can be the beneficiary. Fiscally and monetarily, we believe that the policies are supportive from the growth point of view. We are poised for a better earnings growth for FY27. I guess the perception and the reality will get converged somewhere, and probably the returns will be better. But one needs to be disciplined.
Correct.
The euphoria, one should not get carried away. At the same time, should not lose the faith in the market. So volatility is something temporary, but compounding is permanent.
Permanent, correct.
So stay disciplined, investing in the market. That would help.
Okay, great. So how do you balance growth opportunities with risk control, especially in volatile mid-cap market, since you are managing Mahindra Manulife mid-cap funds?
See, mid-cap as a segment is volatile. I do agree with that. But it is also the segment where companies are growing relatively higher compared to their large cap. We have a data actually which is supportive. I think 2018 was the year where AMFI came out with this categorization.
Correct.
If you compare the data of Nifty 50, Nifty Next 50, your NSE 500, including NSE 250 small cap, and then NSE 150 mid cap index, the index has delivered, it has outperformed on an 8 years, 5 years, 3 years basis across. The reason being, the mid-cap companies are in the segment where their business models have become a bit of mature. They have established their presence, they're gaining market share. They are in the phase where the operating leverage is playing out, the margins are coming, and that's where they're commanding the premium and why the growth is there. You pay valuation premium for the growth, a sustainable growth. Somewhere on a small caps can be a good segment, yes, I do agree, but not all small caps can sustain. Because mid caps are the companies which have already gone through that cycle of fragility, proven their performance, and got into the mid caps. And why that CAGR is important, something the index delivering more than 8 years, even say you go long back, even say 10 years and 20 years, mid cap index has outperformed all these 4 indices what I indicated to you. How it was possible? Because those companies, obviously the index constituents have changed, same mid cap companies have become large caps, but the segment, also these mid-cap companies, when it becomes large cap, they do grow, but the speed of growth, the rate of growth slows down. And that's where to a certain extent the valuation cap comes into the picture. Today, all of us pay premium for that high growth, and that's where probably the performance has come. So the volatility is there. I would suggest the best way to manage the volatility is through, don't get carried away with the euphoria. Use the valuation prudence, follow the discipline framework, your cash flow analysis, the balance sheet strength, the old school principles, they apply in all the market cycles, nothing changes. So follow those principles and be little conscious about the cycle. Your portfolio has to be a blend of those structural compounders as well as with the few of the cyclicals. That's where portfolio returns will be stable. And look for that being in the market. Don't time the market. Just spend time in the market.
Yes.
So
Timing.
I think that's how you manage the mid cap.
Yes. Okay. So a quick rapid fire round. So current markets, what is your view? Bullish, bearish, or selective right now?
Selective.
Okay. Quality or valuation? What matters the most?
Quality at valuation.
Okay. Which segment to invest in for the next 3 to 5 years?
Well, the most easiest answer will be Indian equity.
Okay. SIP or lump sum at current levels?
SIP.
Diversification or concentration? What creates wealth?
Depending on the investor's horizon, something on a long-term basis, I would suggest that diversification always helps. It helps to manage the risk in a volatile environment. So I am in the favor of diversification.
Okay. Most underrated investing habit?
Timing.
Okay.
Timing and probably panic selling in a volatility.
Correct.
And FOMO probably.
Correct.
That leads to sometimes you participating in the peak valuations. And once you are out of the market, when you lose your hard-earned money, getting into the market is very difficult.
Correct.
So discipline is far important.
Equity investing is more about patience or courage?
It is about patience.
Okay.
With courage.
One advice for first-time investor?
Start early and with a discipline. Don't lose faith. Avoid noise. Don't look at the portfolio every day. Rebalancing is important, so do it periodically and seek the expert guidance if you do not have the knowledge.
Okay. And your one-line message to investors watching this?
I would say the same. Volatility is temporary, but compounding is permanent. So stay invested with discipline.
Okay. Thank you very much, ma'am, for your valuable time and opinion.
Thank you very much.
Thank you.